Hello and welcome to the program. Thank you all for joining us this Monday afternoon. I hope you had a fantastic weekend. This is the Money Show coming to you live from the nation's capital, Abuja. I am Nancy Lo. Thank you all for joining us again today. Our theme will be looking at Nigeria's economic issues. A lot of challenges ahead. Tokwe Fascio, the Chief Executive Officer at Global Analytics, will be joining me in a short while. I'll try as much as possible to dissect a lot of issues. The Monetary Policy Committee meeting will go on today, that is if it's not currently going on. But Sanusi Lamido Sanusi will brief the press tomorrow, I guess so. Just also last week, I told you that preceding the meeting, we'll get inflation figures from the National Bureau of Statistics. That came up through last week, and the NBS, which is the statistical agency in the country, said that the Nigerian economy grew 6.5% in the first quarter of this year, helped by growth in the non-oil sector, as well as giving us inflation figures of what we call the CPI. The CPI is the Consumer Price Index, which measures inflation. It rose to 9.1% in April from 8.6% in March. From January this year, we've seen inflation trading at a single digit. I think the inflation rate for January was about 9%, in February 9.5%, in March 8.6%. Then in April, the NBS has told us that it's at 9.1%. I'm beginning to imagine that perhaps these inflation figures would also dovetail into what the MPC will come up with tomorrow, talking about interest rates that has been at 12% for more than a year right now. Some analysts are saying perhaps the MPC will just leave the MPR at 12%, or they will just cut it 25 basis points off. But let's see how that will play out tomorrow. But still looking at the economic figures, talking about how the economy grew, we've seen economic growth slow, 6.56% in the first quarter of this year, from about 6.99% growth of the Q4 of 2012. However, the oil sector contributed about 14.75% to the real GDP in the period under review, compared to 15.8% in the corresponding quarter of 2012 and 12.5% in the Q4 of last year. The National Bureau of Statistics also put the daily average crude oil production at 2.29 barrels per day in the first quarter of this year, compared to 2.35 million barrels per day in the corresponding quarter of the previous year. It said that the output in the oil sector had decreased in the first quarter of this year relative to the corresponding quarter due to disruptions as a result of pipeline vandalism or bunkering declared by AGIP during the period under review. All right, moving ahead, what do I have next for you? Facts, of course, that we got at the weekend indicated that the federal government has recovered over 100 billion naira unremitted taxes due to the ongoing investigation initiated by the House of Reps on commercial banks tax accrued to the federal government. We'll continue to watch all this situation closely and definitely bring you up to speed when we get enough information on that. All right, let's quickly move ahead to the numbers. Of course, when you tune into this program, you don't just get to hear the numbers or get to see the numbers. We give you facts behind the figures. We'll definitely start from home, where the Nigerian Stock Exchange will be closed in about perhaps in 5 minutes from now. But the Nigerian Stock Exchange has been on an upside for the past few weeks, or since the year started. I must say the year-to-date performance stands at over 25% right now. The market gained about 2% last week. Now moving over to the Accra Bourse, the market in Ghana is flattish today at about 1,842.96. The Nairobi Securities Exchange up by 0.5%. In South Africa, mining workers are seeking for a 60% increase in their wages, and mining stocks are taking a hit today. The South African market, just before I came into the studio, trading down nearly 1% at 41,047.42. The domestic index down 11 points, while that's domestic index in Botswana, while Sendex in Mauritius is trading down 9 points. EGX 30, 0.25% in the red. Moving over to the U.S., where stock indices are pointing to a lower open today. The New York Stock Exchange will be open in a few minutes time and the index futures are pointing to a lower open on ongoing concerns that the Fed may begin to tamper off its quantitative easing program. Dow Jones Industrial Average, Nasdaq as well as S&P 500 were all in the green last week Friday. Now moving over to Europe, where the markets are mixed after briefly touching five-year high, mirroring gains in Asia. In Germany as well as France today, volume was light in both markets due to the Whit Monday holiday, though both markets are open for business, with markets closed in Austria, Denmark, Norway, as well as Switzerland. The FTSE 100 in London is trading down 1 point at about 6,722.75, while Spain's IBEX 35 is down 34 points. In Asia, the Nikkei 225 witnessed the 5.5-year high on optimistic economic outlook feeling the rally. The Nikkei 225 finished at 15,360.81, while Hong Kong's Hang Seng closed 3-month high at 23,493. Shanghai Composite of China down 31 points at 20,200 points, while in Seoul, rising tensions on the Korean peninsula over the weekend added some pressure to Seoul's benchmarks index. In Australia, the index finished above 5,200. Persistent weakness in the Australian dollar boosted stocks with significant exposure to the U.S. market. Now, coming to commodities, oil fell towards $104 a barrel today on ample supplies, a weaker demand for fuel, and a stronger dollar despite strong equity markets. The Brent crude is trading for $103.98 a barrel. Of course, a strong dollar tends to depress oil and other commodities that are priced in the U.S. currency on international markets. Light sweet is trading for $95.39, while Bonnet Light is trading for $105.50 a barrel. Gold witnesses longest slide in 4 years, weighed by speculation that the U.S. Fed might rein in its economic stimulus program, and other precious metals that we do watch closely, such as silver and platinum, are also down. Now moving over to Naira rates this afternoon. What's the Naira trading against the basket of major currencies that we track for you on the program? The Naira against the dollar is at 160. That's if you are getting at the parallel market, you should be buying $1 for 160 Naira. Against the pound is going for 248, and against the euro is going for 210. Nigeria's external reserves as at 16th of May stood at $48.4 billion. The Central Bank of Nigeria sold about $207.6 million at the WDAS last Wednesday. Moving over to international currencies, the dollar against the euro is sitting at 128. The dollar against the pound is trading for 152, and the dollar against the yen is depreciating, trading for 102.55. Let's quickly take a break, and when we come back, the program continues. We'll be looking at Nigeria's economy, the intricacies and the issues we started last week, but a whole lot to talk about. Inflation numbers, MPC meeting today and tomorrow, exchange rates, interest rates, and I shouldn't also forget to tell you that the Chief Executive Officer of the Nigeria Sovereign Investment Authority, that is the NSIA, Uche Oji, briefed the financial press this morning at about 11 a.m. in their office. I was briefly there. We'll be giving you more details, of course, in the programs ahead, but I think that is his first exclusive chat with the press. Work is about to go on. I'm also aware that investment would be in the second quarter of 2013. Anyway, we'll keep our fingers crossed, as they say. Let's quickly take a break, and when we come back, the program continues. Please stick around. We'll be right back. Welcome back. In case you're just joining us, it's the Monday edition of your number one financial newsroom in the country. I am Nancy Lu, and joining me right now is my guest. He is Tokwe Fashua, the Managing Director at Global Analytics. He's a regular analyst here on the show. Good afternoon, Mr. Fashua.
Good afternoon, Nancy.
Good to see you.
Yeah, same here.
Quite a while. Let's quickly talk about, of course, I said at the beginning of the program, economic issues. You know, I think I started this last week. And I've talked to two analysts here on the program. I did first with Dr. Owo Godwin, and I also talked with Johnson Chuku, the Managing Director of Carry Asset Management. So this is the third in the series, as it were, because there are a lot of economic issues just punching me in the face, you know, and I really just have to look at them. So I think we'll just get started, first of all, by asking you, I did say at the beginning of the show, the MPC meeting starts today and ends tomorrow. It's a two-day policy meeting where we'll definitely see Sanusi and other members of the monetary policy meeting to decide on interest rates, which is key, and also other rates, the liquidity ratio, the CRR, also to review the domestic economic environment, review the external developments, and also tie everything in, talking about Nigeria's economic sustenance. So we expect to get review tomorrow, the results of the meeting tomorrow. But as an industry watcher, what is actually your take? This is a ritual that is done probably once in a quarter or so, if I'm not mistaken. What actually is your view?
Well, thank you very much for the question. Basically, I've always said that, you know, in my own view, the monetary aspect of things is not the key issue with Nigeria. Most of our problems are actually on the fiscal side, and that is, I mean, is much talked about these days. So, like most people are saying about the MPR, well, they believe, a lot of people believe that the MPR will not change. Some are saying, okay, maybe at best minus 25 basis points, 0.25 or thereabouts. You know, when I looked at it myself, I realized that the reason for the central bank keeping the MPR at 12%, plus or minus 2, you know, most of the reasons are still there. You know, of course, when you increase interest rates in that, or you give an indicative interest rate in that manner, which is what the MPR is, something for the banks to benchmark. And it's that high. What you're trying to do is to reduce inflation. Of course, the central bank, through the pronouncements of the MBS, there's the Bureau for Statistics, have been able to bring inflation down to about 8%. Then it went up slightly to about 9% recently. So we're talking single digit here, which is not too bad. But then again, when you have within 2 quarters, if you achieve single-digit inflation, do you then release the valve so that the inflation can fly off again? So, you know, the central bank may be looking at sustaining the present regime of single-digit inflation by keeping the MPR at the level where it is, or at least, or at best, you know, maybe just adjusting a little bit. So, what are the reasons for keeping, you know, interest rate at that level? When you increase interest rates, you're trying to curb inflation, which